robust agenda. We'll stay focused on our audit finances today. But before that, we will make a roll call, and Marty's going to have a couple things to go over. Roll call, please.
Alderman Robert Bauman. Mr. Bill Christensen.
Here.
Senator LaTanya Johnson.
Here.
Mr. James Cantor.
Here.
Representative Jesse Rodriguez. And Ms. Liz Sumner.
Here.
And we have a quorum.
Okay, great. Before we go over to our first item, the meeting minutes, Marty wants to have a couple just brief things.
Just for those at the table, to supplement the audio for those not attending in this room, these little boxes, two in the middle and this one here, are microphones. You can speak any differently, but just wanted you to be aware that's what they are. So if you can avoid hitting them, tapping them, I would appreciate it. And then the second thing, good. See what you do. The other thing I wanted to introduce to the group, Robin Pitts. Robin, if you could acknowledge, Robin is our new executive assistant for the district. She started on Monday. I'm very excited because she has come in on Tuesday, Wednesday, and now Thursday after day one. So all's good. Welcome, Robin. She's terrific. Please reach out to her as you would have my commercial.
Right, welcome, Robin. Thank you, and thanks for the mic. I was wondering what those. I appreciate it.
Keep everybody.
Point two, our discussion on two is any discussion and the approval of the meeting minutes from our last finance committee, which is on January 9th, 2025. Do we have any discussion? I would seek a motion for approval.
I'll move approval.
For the second?
I'll second.
Right, all in favor say aye.
Aye.
Aye. Any opposed? Okay, great. Minutes are approved. Next, we'll be a little more in depth on finance and audit today. We'll kick it over to Steve and go over our financial report.
Thank you, Mr. Chairman, and good morning, everyone. The main topic of today's meeting is a presentation from Baker Tilly regarding the 2024 audited financials. We'll also review year-to-date 2025 financials, as well as a projected year-end forecast. But before we get into the numbers, just a few quick updates. Number one, as part of the district's long-term strategic financial plan, management will be evaluating opportunities to defease or not some of its long-term debt later this year. As we discussed last fall, the transaction the board approved in October of 24 was year one of a potential 5-year plan to retire some long-term debt early in advance of the 2030 bond call dates. Later this summer, management will be reviewing with Baird the current state of the debt markets to determine if executing a defeasance transaction is in the best interest of the organization. We, of course, will continue to update this committee and the full board as opportunities present themselves. And number two, Marty and I thought it important to update the board on a project the district is currently undertaking to improve and optimize its business processes. As we've become a more sophisticated and professional organization during Marty's tenure, our business and operations have become more complex. After the expansion opened, the management team took a step back to evaluate how we do business. Determined our current systems and processes were not serving us like we needed. So last year we kicked off an initiative to help modernize our technology, systems, and processes. A large focus of this project will be retiring outdated and unsupported technology we use in finance, purchasing, billing, data analysis, and content management. And the implementation of a new ERP system is an enormous component of this overall project that will impact the finance department as well as other areas of the organization in a significant and positive way. Additionally, and included in this year's IT budget, we are making strategic investments in software and systems across the entire organization. This project will modernize the way WCD operates, keeps us competitive in the market, future-proof us against changes, and position us to seize on opportunities as we grow. A consulting firm out of Madison called SVA is assisting the senior management team with this endeavor, in particular with project structure and change management. We will continue to update the committee and board on the progress of this very important initiative. Artie, so you want to say that? Okay. So before I turn over the meeting to Wendy Younger, Baker Tilly, let's get into the 2025 numbers. And we'll start with page 6, which is the event mix summary. I won't spend a lot of time on this today, but you can see in column B that the current 2025 event mix forecast shows that we're about 85% to our budget number. The biggest gap right now is line 5 corporate meetings. This business segment typically contributes the least amount of net income per event to our bottom line. So the lack of events booked under this category to date isn't overly concerning. And oftentimes these event types require the least amount of lead time on our calendar. So we're optimistic these numbers can pick up before year end. And just as a caveat, while the numbers in this event mix can be useful in understanding the levels of event activity on our campus, they are far from perfect when attempting to understand building utilization and ultimately net income. In fact, as part of the SVA project, we're working to develop a more transparent and relevant metrics to measure district event activity, and we may look to introduce those key performance indicators in the next fiscal year. Let's move to page 7, which is our year-to-date income statement with column IDs A, B, C, and D at the top. Column A represents year-to-date budget through March. Column B represents year-to-date actual results, and column C is the variance between the two. Starting with the bottom line first, you see on line 65, column C, we're off from budget by about $300K. There's several line items driving this variance. First to operating income, line 4, food and beverage revenues down from budget by about $270K. And while gross revenues in this category are coming in greater than budget, the expenses incurred to run that business segment have been greater than expected, notably on the labor side. Levy has been working with the district team to develop strategies to lower this expense going forward. And it's a delicate balance between managing labor expense and delivering a level of service our clients expect. So our team is taking a very thoughtful and intentional approach to this topic. Despite that negative variance, total operating revenues are down from budget by only 3%, as noted on line 14. Moving to line 34, you see tax revenues is less than budget by about 1.5 points, most of which is related to car rental tax. Management is not overly concerned about this variance right now, and we're going to continue to forecast our budget for the remainder of the year, as you'll see momentarily. Line 44, health and dental insurance is running higher than expected due to early onboarding some benefited employees. And line 49, visit Milwaukee expenses also higher due to better than expected tax revenue collections in the fourth quarter of 2024, which of course is what their payment is benchmarked against. Historically, through first quarter, it's not uncommon for us to see these variances relative to budget. The combination of these 4 primary factors leaves the district with a negative net income budget variance of about 13%, again, as noted on line 65. So what does the rest of the year look like? Well, let's turn to page.
On the F&B, is there any correlation between having less smaller meetings and the costs to run those from Levy standpoint on the F&B side to bigger events? It's more efficient to run them and you get a better F&B. Is there any correlation there?
Well, I think what we're really digging into right now, Mr. Chairman, is cost per employee and really some of that hourly labor. About a year ago, Levy implemented a plan to onboard employees in a more benefited way to increase retention rates and improve the quality of service. And of course, that's more expensive per employee. And we're looking at ways on how we might be able to bring that cost down. So the event mix, I think, is less of a factor, and more of how we've approached the hiring structure of the last 12 months. Page 7 is our, on to page 8.
The same thing again.
This has column IDs E, F, G, and H at the top. This income statement compares our annual budget, column E, for projected annual year-end forecast, column F. And again, starting at the bottom line, in column G, line 65, you can see that while negative overall variance grows from year to date, it's also a smaller overall variance as a percentage of net income, 5% for the year versus 13% year to date. You can see total operating income, line 14, is better than budget by about $250K. Despite the growing negative variance of line 4, food and beverage, we expect most other event revenue categories to be better than budget, driven by strong blue sky bookings by the WCD sales team for third and fourth quarter. Line 27, operating expenses, is expected to be about 2% over budget, driven by operating wages. Line 15, and total event expense, line 20, and that captures the amount of event revenue we share with our arena team tenants of food and beverage and merchandise sales.
Excuse me, Steve. Did someone join online?
Connections for some.
Line 34 tax revenues, we're keeping in the forecast year-to-date negative variance through the first 3 months, but are forecasting budget rest of the year. Line 38 Bucks District ticket surcharge revenue is down from budget, namely a result of the Bucks' unfortunate early playoff exit. We were budgeting a playoff run than what they gave us. The other big notable variance again is just Milwaukee, line 49. Prior page. This is a function of the 2024 fourth quarter tax revenues coming in better than expected. Again, overall, line 65, column G, is showing that $1.5 million negative variance and $29 million of budget net income. I would say management's not overly concerned at this time with the forecast for several reasons. Number one, I would say that some of our forecast projections are hedging on the conservative side, with some uncertainty linked to tariffs and the impact that's having on travel, as well as actions that have reduced or cut federal funding and grants to state national associations. We're taking a cautious approach to our forecasting for the remainder of the year, or until there appears to be more certainty associated with these larger macroeconomic events. And number two, should this forecast come to pass, the district has sufficient operating reserves to manage through this without introducing material financial risk into the organization. Lastly, number three, there are some discretionary spending dials that management can turn if necessary that would limit cash outflows.
Just Representative Rodriguez,
Yes, I'm on.
checking to make sure you're here. Thank you for joining us.
Thank you. I'm sorry. I was having problems logging in. Apparently, I was using the other login that Mikhail sent.
Okay, thank you.
There are other discretionary spending dials that management can turn if necessary that will limit cash outflows and allow us to serve our customers and meet our contractual obligations in 2025. The remainder of the calendar year is strong, which is great news, with some remaining opportunities for upside. So it's very possible that come our next meeting in September, we've closed some or all of this budget gap. Any questions on the income statement?
Yeah, Mr. Chair. Steve, do these forecasts take into account some projection for those like blue sky events or those events that have not yet been booked? Do you build in kind of a factor for those, or is that just kind of whatever you book from here on out is kind of gravy on top of this?
Yes and no. So we do put some blue sky in based on opportunities on the calendar that we think could be filled, but it's not 100% of the blue sky that could be put into the budget. And trying to forecast what that blue sky could actually be is challenging. It might be a small corporate meeting that actualizes in one of our meeting rooms, or it could be a larger banquet or even a conference at times. What we've seen coming out of the pandemic is shorter lead times for our sales team to actually book bigger events, which in cases like this is good for us because it could happen that we see a much bigger opportunity show up on our calendar than what we currently have in our forecast. So there is some of that, but not 100%.
Okay, so this might be slightly conservative, even depending on the unknown.
That's right. Yeah.
We're seeing higher than average or normal cancellations at all due to the conditions that we're in?
No.
Okay.
There has been concerns expressed some of the events that the organizations rely on grant money. We haven't seen reduction in business at this point, cancellations.
In our opinion, none of this qualifies as a force majeure event. So if there's a cancellation, there's a penalty to the customer for doing so.
But that also would eat into FB and stuff like that.
Good, yeah. Okay, well, let's turn to page, let's skip past 9 and go to page 10. This document is unique to the Finance Committee and segregates line items for the projected year-end income statements into their respective fund balances. On the left-hand side of the document, you see that we expect to generate from the income statement about $1.5 million in unrestricted revenue, $5.9 million in restricted revenue. The right-hand side of the document then takes the income statement information, finds that with balance sheet data, approximates the overall impact to cash balances on the restricted side after adjusting for the CapEx spend. We expect to see a net negative cash flow, about $2.3 million. On the restricted side, we expect to see a net positive cash flow of $5.9 million. And we present this exhibit as supplementary information to the income statement so that the committee has a better understanding of the impact the income statement, CapEx budget, and debt service payment have on the district's fund balances, what we're seeing here is consistent and as expected based on our current forecast. Any questions on that? Pages 11 and 12 represent the district's annual capital budget forecast. On page 12, line 65, we were currently forecasting our budget number. One of the district's financial risk mitigation strategies is to hold most of our capital spend until the second half of the year in the event we do need to delay the implementation of projects due to a challenging financial result from operations. For now, we are assuming all of our budgeted projects are executed. But again, it's a dial we can turn if necessary. And pages 13 and 14 represent cash flow projections for the remainder of the year. These really represent the district's checkbook balances, so to speak. Page 13 is that unrestricted revenue projection. These numbers are all derived from the projected year-end income statement. You see in the bottom right-hand corner, we expect to have a year-end balance of $12.4 million, which is off from the budget number we established in October, but consistent with the income statement reconciliation document just reviewed. Again, this balance is sufficient enough currently to fund any negative net cash flow from operations in 25. And page 14 is the restricted projection, line 20. You see we expect to grow the account by 5.9 million in 25 and end the year with over 27 million. That's about $1 million more than we had budgeted. With the balance getting to these levels, as I mentioned at the opening of this meeting, we will be investigating options to use a portion of these funds to defease some long-term debt. More to come on this matter, certainly. Good news.
Quick question on
Yeah.
the capital budget. On the projects that are still in the second half of the year, do we expect any increases, or what are these dollars based on? Are there tariff implications to any of these costs that we might have?
Yeah, we haven't seen a lot of that yet, Mr. Chairman. A lot of the expense here is labor, contract services. There is some material costs in here, but I think in terms of risk to the budget, we feel like we're in a good position right now.
Thank you.
As I said, both fund balances are in a great position. As I noted in January, these funds are a position of strength for the district, and that allows us to manage through that negative operating years that we're forecasting, also create optionality for a debt management strategy. Mr. Chairman, that's my report. I'm happy to take any other questions before we jump into the presentation for Baker Tilly.
Does anybody have any questions for Steve, either in the room or on the video? All right. If not, turn it over to you.
Well, before Wendy gets started, I just want to quickly say that this year's engagement with Baker Tilly and the WCD was extremely cooperative and congenial. For the most part, all information requested by Baker Tilly was provided on time or ahead of schedule. Subsequent discussions and follow-up between management and Baker Tilly were tight and efficient. I'd like to acknowledge the district's internal finance team, namely Kyle Graham, see you right over there, that very handsome tie, and David Ray. They are now well-seasoned veterans of not only our district business operations, but also the audit procedures we execute each year. Their ever-growing institutional knowledge has proven to be invaluable during this process. So a big thank you to both of them for their work on this audit. As has been customary for the past 7 years, Marty and I, along with Kyle, reviewed these statements in advance with the city comptroller and also provided the county comptroller in advance preview these statements. Management believes these statements are well vetted and are a result of the importance that Marty and I place on the integrity and transparency of the financial results of this organization. So following Wendy's presentation, if there's any questions and discussion from committee members, we can walk through that. But we will ask the committee to pass a motion recommending the full board adopt these financial statements at next week's board meeting. Wendy, turn it over to you.
Good morning, everyone. Wendy Younger, I am principal at the committee. We have the presentation up on the screen, but in addition to the presentation, I do believe in your informational packets, you do have the audited draft of the financial statements, a draft of the reporting and insights document, and also a draft of the Levy report and a draft of the agreed upon procedures related to the pilot calculation. So to start with, we are going to go through, again, the objective of the audit, go through some very high-level financial information. We will talk about the reporting and insights document and its related content. And then we'll also just briefly talk about the Levy and the pilot documents that you have before you. The objective of the audit was to issue an opinion on the financial statements of the district. Included in your draft document, same type of opinion you've received in the past, a clean, unmodified opinion, highest level of assurance you can obtain from us as your auditors. A reminder that that unmodified opinion means that the financial information it contained within the drafts is believed to be materially accurate. All disclosures that are required to be included have been included. We follow generally accepted accounting principles. I will highlight that there was during 2024, the very last item on here, there was the implementation of GASB 101. That's the accounting for compensated absences prior to 24. The district did not have accruals recorded for compensated absences, a very immaterial dollar amount in the grand scheme of your operations. But due to the discussion of GASB 101, that accrual was recorded, roughly $190,000 of compensated absences that have been recorded as a liability on the district's balance sheet. So just wanted to quickly touch on that if you did notice an additional item. Moving then into some very high-level financial information. What I've presented on this next slide is the statement of net position. So this is the balance sheet for the district 24 compared to 23. A couple items to note, and you're going to hear a recurring discussion on reasons for the variances. One being construction relatively complete. All construction in progress was capitalized during 2024. So those assets are now being depreciated. So you're going to hear some fluctuations on the income statement for depreciation. But overall, when you look at your total asset category, you'll note a decrease of roughly $75 million. A couple different reasons for that. The construction cash you had on hand, roughly $116 million, is now gone. So you've utilized the remaining, or a good portion of the remaining funds to pay for the remaining costs of the project. In addition to that, as I noted, the assets were capitalized. You spent roughly another $70 million in capital assets. So the difference between those, along with some additional depreciation that we'll see in a moment, the increase for the full capitalization results in a decrease in your total asset category. When we look at the next category, which is your deferred outflows of resources, these are items that come from actuarial valuations related to the ERS, the employment retirement, or the employee retirement system, and the related deferred outflows. Those went up $4 million related to the pension. When we look at the current liabilities, again, construction is essentially done. 23 had significant accounts payables, amounts due to vendors for construction. So you see a very large decrease in your current liabilities related to that. And then when you look at that next section, which is your long-term liabilities, this is where you account for your debt. So as Steve mentioned in his presentation, related defeasance, there was debt that was defeased during 2024, roughly $12 million, meaning that those monies went into a trust and will be used to pay that debt when it's callable, which I believe is in 2030. So those funds will sit there, but that debt has come off of the balance sheet of the district. In addition to that, you had your normal and customary pay down of debt, another roughly $13 million, I believe. And then you did see an increase in your pension liability for ERS, which was roughly an $8 million increase. And then you did have an increase in the accrued interest on your long-term obligations of roughly $15 million. So a lot of pieces to that, but most of that is debt related. Deferred inflows, again, these are related to the various pension and OPEB obligations of the district, and those remain relatively consistent throughout the year. The bottom portion of the table shows you the related pieces of net position. So your equity as of the end of the year, noting the fluctuation in the net investment in capital assets. Again, that is based on capital assets less accumulated depreciation, less the related debt for those assets. So just a little bit of fluctuation there. Again, restricted will continue to decrease as monies are spent or finally finishing spending on the construction. If we turn to the next page then, this is the income statement. So these are the operational results for the district for 2024 compared to 2023. So at the very bottom of this page, You'll notice that there was a decrease in that position of 18.6 million for 2024 compared to a $2.7 million decrease in the previous year. Going to mention the largest contributing factor to that is depreciation. Your depreciation went up $10 million over the previous year due to the addition being capitalized and depreciated in 24. So that is the largest portion of that. Again, a non-cash type activity. So we'll see that on the cash flow on the next page in a moment. But a couple other items that warrant mentioning. The top part, your operating revenues, 24 million compared to 17 million in the previous year. That's up 7 million. And again, recurring comment, RNC, right? You had a $4 million licensing fee that came in 24, and then $2 million increase in your food and beverage during 2024. So most of that fluctuation or the largest portions of that increase are due to the RNC. The next category is your operating expenses. Those are up about 20 million over the previous year. Again, as I mentioned previously, 10 million of that relates to depreciation. The remaining pieces, if you think about 24 compared to 23, the Baird Center was in full operation. You have additional costs associated with that from the standpoint of additional engineers, electricians, carpenters, cleaning. So all of those add up and essentially had an increase in cost related to those items. Utility costs are up about $1 million, 1.4 million in wages. Admin wages were also up, and then the other larger piece of that increase was the pension, 2.8 million increase there. When we look at the next portion, which is your non-operating income, relatively consistent. Tax revenue did go up roughly 3.3 million, and you really saw an increase in all the various areas, not just one of the categories. It was their significant fluctuation backwards. So all of them did increase over the year. Your interest expense, very comparable to the previous year. And then other income, that is where your investment income is included. Cash is gone, less interest earnings, so that your investment income was down by roughly $7 million. So largest pieces of that portion also. So again, when you look at your decrease in that position, 18 million down to 112 million, the reason for that decrease are the items that I previously mentioned. On the next page, I'm not going to go through this in any great detail, but this is the cash flow for the district for 24 compared to 23. As you can see, cash flows from operating activities continue to be comparable. You fund those with your tax receipts, you fund those with the contribution from the state, so that bottom portion covers that operational deficit. You also had, again, the payment on the bond. So when you see the 27 million there, that is higher than the previous year because it does include the defeasance of the 12 million. And then ultimately, you'll note the 115 million of capital assets where you use cash on hand, a good portion of that being that restricted money that I mentioned earlier. On the next page, this is where I've just highlighted, as I mentioned when I began, we do also include the capital reporting insights document. Very consistent with previous years. Again, very happy to say that the district has great internal controls. We evaluate those as part of the audit process. The material weakness that we do include here is because we do prepare your audited statement. So we become part of the district's internal control for a brief period of time. We also do have one audit entry of a material nature, and that relates to the pension activity that gets recorded by us as your auditor. So that is the material weakness that is noted on the slide. In addition to that, again, everything else included in that report is very normal and customary, nothing I need to draw your attention to. There is a portion of that document that is ours as your auditors. We utilize that document to communicate items that we need to under our standards, talks about the very estimates that are included in the district statements, also talks about whether or not we had any disagreements, which again, we have great cooperation from Steve and his team, so we thank them for that. So again, nothing unusual or unexpected in that draft report that I need to draw your attention to.
Wendy, just one comment on material weakness there, and this is something that has shown up every year. Since Baird and I have been a part of the organization, there's an opportunity for us to perhaps get rid of that next year as we implement the ERP and the technology that we have to support this process improve. So it's something we're going to look into deeper once we roll out the program later this summer and see if we can't finally get rid of that next year.
And more than happy to share our documents with you for the financial statements and that type of thing. So happy to assist in that process any way we can. All right, then the last slide that I have included in here does talk about the Levy premium food service audit. It is a different type of audit, so it's not a normal unmodified type of opinion. We look at specific things related to their contract and their agreement with the district, and we will opine on the items that we look at. But again, in our evaluation of the work, and you do have a draft included in your packet, nothing unexpected or unusual came up. Again, we thank Kyle and Steve for their assistance in getting the information from them. That's been a struggle in the past, but I think last year started a good process, and this year continued to see significant improvement in cooperation that we get from them. So very happy to say nothing unusual there. And then I also, I don't have it on the slide or a slide for it, but included in your packet is also the agreed upon procedures opinion related to the pilot population and our review of that for accuracy in agreement or compliance with the contract that they have. So nothing, again, unusual there, and the information that is included in your packet, I believe, showed roughly a $2.6 million loss for 24. On the last page, again, include my contact information, my email, my phone, my cell phone. I'm happy to talk with anybody in more detail on any of this information. But at this point, I'd also be happy to address any questions you might have currently.
Questions for Wendy online? Are there any questions? Oh,
Nope.
nailed it again, Wendy. Awesome.
Thank you.
All right. Thank you very much. Appreciate it. Steve, you and your team, Wendy, your team, thank you. Good cooperation always leads to good results. So that's a testament to you guys working together and getting this stuff done. So we appreciate that on the board, and we appreciate no surprises or issues as well.
Yes, me too.
Of this time of the year. Yeah. With that, he did a great job. The passion he has for this morning. Got it done.
Next week, we start talking about budget, so don't
Yeah,
give
we
me
do.
any slack.
It's a week off. All right, Marty, with that, I'll turn it over to you. The CEO report.
Before we go,
We would like a motion from the committee
That's
to
right.
recommend that the full board adopt these statements at next week's board.
I'll make that motion.
We have a second? All in favor, say aye.
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 Any opposed? Great. So we will go to the board with recommendation from this committee. Thank you. Now, with that.
thank you.
Appreciate that.
Mr. Chairman.
Turn it over to you for your CEO report.
Thank you. As I do, I'm not going to get into detail of discussing next week, but just want to give you an overview of what I'll be sharing. Tom and I will give an update on where we are with the number of event activities, not so much on the financial side, that'll be coming from Steve, but as far as events of note that have occurred since we met in January, as well as just high marquee events that'd be good for you to know are on our calendar for the balance of 2025. We announced last fall that we had brought in HB Hush Blackwell to serve as our legal counsel. We've done a bit of a shakeup in lobbying efforts and have engaged HB Strategies out of Madison to join our team as lobbyists. So we're happy to have them join us. We've had a meeting with them earlier this week with Laura Fitzgerald and John Yingling, and I think we put together a really good team that's going to help us guide us into bigger and better things and make sure we also stay out of trouble, Mr. Chairman. So we don't need Hush Blackwell services to get us out of
We
said
appreciate
trouble.
that immensely.
There are, and I will go into this in detail next week, but we have two major tenant agreements that come up in the next 2 to 3 years. And as we start to look at negotiating strategies with those clients, it's a much bigger discussion than just let's sit down and renew. So I'm going to be sharing that with the group next week, identifying what those contracts are, and then presenting to the board our strategy as far as how we're going to undertake cleaning information so that we can then come to the board with a recommendation early mid next year on how we move forward with that project. So I want you to be aware of that. We have had a lot of good fortune for both the Baird Center and Wisconsin Center District as the entity in getting recognition for the expansion, both architecturally, utilization-wise. So I'll be sharing a laundry list of accolades that our organization has gotten, and be setting up a table, not quite this large, but a table displaying those acknowledgements so you can see how the industry and our peers are showing their appreciation for the work we've done.
Question on that, Marty, if I could.
Yes.
Where are those stored? Do we display those inside the Baird Center or anywhere else so other people can see? And I just haven't noticed them or seen them.
Yes, and yes.
Okay.
Yet they are
Yes,
not
I haven't
currently.
seen them.
Yes, you haven't seen them. And while we don't have the display case in place yet, Sarah and her team are working on a display opportunity at the employee entrance, because it's really not to tout this to the board or to our guests. It's to tout this to our staff so they feel the acknowledgement that we have in the organization. They can take pride in how we're being, because of them, honored. So it's not in place yet, but we will be placing something.
Yeah, I didn't know if there's any value in the customers that come through or our clients that come through, the people that are wondering, looking at the great art that we have, if they see all the recognition that this has received, might be another feel-good thing. I don't know, just at least a plaque or a list of stuff. I don't know, it's just a dumb idea, but
there's no such thing as a dumb idea.
But I think we should be proud of it.
You, Mr.
You didn't tell me that.
We should.
You're
should be.
chairman.
I just think the team should be proud of that.
Yeah.
Right. Like there should be somewhere that says, "Hey, we've done all this stuff together," and I think it means something. When I walk into a building, if it's outside, I'm like, "Oh, this has been recognized as a great place to be by the community," and I think that means a lot. So.
Well, and that's why we want to not place it in the administrative offices. When Megan and her team are giving tours, they usually go by the employee entrance, so as part of the building tour. So we wanted to be there. Something that we will be placing, I believe, in the next 2 weeks is we have received the rather large and heavy gold certification medallion that
means a lot
installing on the exterior of the building coming to the north entrance. You'll see it by the Baird Center sign. Very excited and very proud of it. It is, however, not gold.
Oh,
golden color.
Can you lift it? Your back?
I can. I can. There's nothing I can't do for this organization.
Oh my
and won't. Anyway,
Onward.
you set me up. Sorry, but the last thing I wanted to touch base on, and I'm not seeking any action from the committee today, but I had sent out in April a document that was a cover memo and then the full version of the restated, amended services agreement with the city. Bill is a part of the team that represented the city in those discussions that began last October. They were hard at times in that there were things that the city was looking for. There were things that the district was looking for. They were always respectful, professional, and we do believe that the agreement that has been modified addresses the concerns that both had about the existing agreement. And look forward to next week to be able to talk to the board about it, and we'll seek to have our board approve the modified agreement, which will then, subsequent to the board's approval, then go to the common council for the. I'm not asking Bill to respond to this, but I have been told by the mayor's office that the same day that we issued the document to our board, that there was a document issued to the common council identifying what the document was, revised terms. I have no idea, so I'm not looking at whether or not that's been discussed, socialized, or whatever with common council members. But we, as management of the district, really look forward to presenting to the board and moving forward with our relationship with the city, which has never wavered from Dr. So that'll be next week's board meeting. I do believe biggest point I had to make sure I didn't miss was introducing Robin, since I did that before we started. I'm good. So that concludes my report for this meeting. sir.
Great. Any questions for Marty? Fantastic. All right. With that, next week we will have our board meeting, our full board meeting. So you can see that's on page 122, very similar to what we ran through here. Financials, our audit will take up most of the time. Marty will go into a little bit more of an extended discussion in his CEO report on a couple things, but other than that, pretty normal May board meeting, and the next one would be in September after. Yeah. If there's anything you would like added, please get a hold of Hush Blackwell or us, and we can get that added to the board to the agenda. As you know, we have to publish those in advance, so if we don't hit that deadline, we would have to wait till the next board meeting, which is fine. If there is anything anyone wants to talk about now, please bring it up. If not, you can talk to us after. With that, I would seek a motion to adjourn.
I'll second.
All in favor, say aye.
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 Bye.
All right, great. Thank you. Enjoy the day and the weekend.
Thank you,
Everybody work.
Thank
Thank
you,
you.
Jesse. Appreciate your time.
No
Thank you.
problem.
Have a
Thank
nice
you.
day.
Next week, I won't.
Sitting there like.
All right, I think we are ready to take a roll call. First, you want to introduce Robin?
Yes, I would like to. Thank you, Mr. Chairman, for letting me do some housekeeping before we get started. In front of Mr. Crosby and Chairman and myself are these little black boxes. Those are supplemental microphones, so just try not to tap them or move them around. And then I wanted to introduce.
Is this thing on?
It's a recording device, for sure.
Never mind. This thing up, but never mind. We have a new executive assistant with the organization, Robin Pitts. Robin, if you would. Robin started on Monday and she came back Tuesday, Wednesday, and today, knowing that we had this committee meeting. So she is crazy like the rest of us, which is why we fell in love and hired her. So she joins our team. Please reach out to her as you would have Michael Maxwell. We're here to support the board, and she's just a great addition to the organization. Hope to have her with us.
Okay, great. With that, we will get started with roll call.
Mr. Grady Crosby,
Here.
Mr. Mark Flaherty,
Here.
Mr. James Cantor,
Here.
Mr. Greg Marcus,
Oh. Without fail.
As usual, right on. There we are.
That off every time.
Yep, the 3-minute mark where you're in.
He has to have his dramatic entrance.
Yes.
and Representative Kayla
Theatrical.
Haywood.
What do you want?
I like your new cartoon.
Oh, great. Is that animation? Yeah.
I had to go to a movie.
Glad to go to the movie. It's a big test.
Representative Kayla Haywood. We now have a quorum.
Okay, great. Thank you. First order of business is any discussion in the approval of the meeting minutes from our governance meeting on the 9th of January, 2025 from this year. Is there any discussion? Seek motion for approval.
I'll move it.
Do we have a second?
Second.
All in favor, say aye.
Aye.
Aye. Any opposed? Meeting minutes from January Governance Committee are approved. Next, we will turn it over to Steve as we have a fairly heavy financial discussion today.
Thank you, Mr. Chairman, and good morning, everyone. Today, we will be reviewing the year-to-date 2025 financials, as well as a projected forecast for year-end. But before we get into the numbers, a few quick updates. The first, as part of the Finance Committee meeting that just adjourned earlier this morning, Baker Tilly presented the draft 2024 audited financial statements to the Finance Committee. Baker Tilly will be issuing an unmodified opinion that the district's financial statements present fairly in all material respects the financial position of the WCD, which is a result that management and the board want to achieve at the conclusion of this process. The Finance Committee voted affirmatively to recommend that the full board adopt these financial statements at next week's board meeting. Baker Tilly will be at that meeting to give the board a presentation prior to the vote for adoption. Overall, the results in the statements were not materially different from those that were presented to this committee in January. Number two, as part of the district's long-term strategic financial plan, management will be evaluating opportunities to defease or not some of its long-term debt later this year. As we discussed last fall, the transaction the board approved in October of 24 was year one, a potential 5-year plan to retire some long-term debt early in advance of the 2030 bond call dates. Later this summer, management will be reviewing with Baird the current state of the debt markets to determine if executing a defeasance transaction is in the best interest of the organization. We, of course, will update this committee, the full board, as those opportunities present themselves. And number three, Marty and I thought it important to update the board on a project the district is currently undertaking to improve and optimize its business processes as we become a more sophisticated and professional organization during Marty's tenure. Our business operations have become more complex. After the expansion opened, the management team took a step back to evaluate how we do business, and we determined our current systems and processes were not serving us like we needed. So last year we kicked off an initiative to help modernize our technology systems and processes. A large focus of this project will be retiring outdated and unsupported technology that we use in finance, purchasing, billing, data analysis, and content management. The implementation of a new ERP system is an enormous component of this overall project that will impact the finance department as well as other areas of the organization in a very significant positive way. Additionally, and included in this year's IT budget, We are making strategic investments in software and systems across the entire organization. This project is going to modernize the way that the district operates, keeps us competitive, future-proofs us against changes, and positions us to seize on opportunities to grow. A consulting firm out of Madison called SVA is assisting the senior management team with this endeavor, in particular with project structure, change management. So we will continue to update the committee and board on the progress of this very important initiative. Let's get into the 2025 numbers. Start
Can
with
I ask one question about the audit?
yes, sir.
Do they, and I think I remember on public audits, we get that, you get an unqualified opinion, but then you get the, oh, here are the things you're concerned about section. That's the new thing. Do we have that in ours?
They do note a material weakness for the district, and it's the same material weakness that they note every year. That's Baker Tilly helps us put together the final financial statements at year end. They also make a journal entry to account for our obligations to the city of Milwaukee pension system. The project I just described that we're working on with SVA may allow us to create our own financial statements moving forward into next year. So it's possible we get rid of that going forward. But that's really the only thing of significance, Greg. There were no disagreements with management. There weren't any material findings other than that one material weakness. So it was a pretty clean audit by our standards.
Yeah. Oh, I mean, that's not a bad thing to have. I mean, not today. We all get them. I mean, that's what they do. You have to write it so they feel like they did something. Do they then make us sign a rep letter that says even though they helped us with the financial statements that they have nothing to do with them?
Yeah, Marty and I will sign that after the board meeting next week. And you're right. It's not our fault. Sign away, right? Yep.
So your world's a lot like mine.
Yeah, that's right. Okay, 2025 numbers. We're going to start with page 5 of your packet. And this is the event mix summary. I'm not going to spend a lot of time on this today, but you can see in column B that the current 2025 event mix forecast shows we're about 85% to our budget number. The biggest gap right now is line 5 corporate meetings. This business segment typically contributes the least amount net income per event to our bottom line. So the lack of events booked under this category to date isn't overly concerning, and oftentimes these event types require the least amount of lead time on our calendar. So we're optimistic that these numbers could pick up by year end. Just as a caveat, while the numbers in this event mix can be useful in understanding the levels of activity on our campus, they are far from perfect when attempting to understand building utilization, ultimately net income. In fact, as part of the SVA project, we're working to develop more transparent, relevant metrics to measure district event activity. We may look to introduce some of those key performance indicators in the next fiscal year. Moving on to page 6, this is our year-to-date income statement with column IDs A, B, C, D at the top. Column A represents year-to-date budget. Column B represents our year-to-date actual. Column C is the variance between the two. Starting with the bottom line, first line 65, column C, we are off from budget by about $300K. And there's several line items driving this variance. First, to operating income, line number 4, food and beverage revenues down from budget by about $270K. And while the gross revenues in this category are coming in greater than budget, the expenses incurred to run this big business segment have been greater than expected, notably on the labor side. Levy is and has been working with the district team to develop strategies to lower this expense going forward. And really, it's a delicate balance, as some of you know, between managing our labor expense and also delivering a level of service our customers expect. So our team is taking a very thoughtful and intentional approach to this topic. Despite this negative variance, total operating revenues are down from budget by only 3%. That's noted on line 14, column D. Moving to line 34, you see tax revenues are less than budget by just over 1.5 points, most of which is related to car rental tax. Management is not overly concerned about this variance right now. We continue to forecast our budget for the remainder of the year, as you'll see momentarily. Line 44, health and dental insurance is running higher than expected due to the early onboarding of some benefited employees. And line 49, Visit Milwaukee expense is also higher due to better than expected tax revenue collections in the fourth quarter of 2024, which of course is what their payment is benchmarked against. Historically, through first quarter, it's not uncommon for us to see these variances relative to budget. The combination of these 4 primary factors leaves the district with a negative net income budget variance of about 13%, as noted on line 65, column D. So what does the rest of the year look like? Well, let's turn to page 7. packet, which has column IDs E, F, G, and H at the top. This income statement compares our annual budget to our annual forecast. And again, starting at the bottom line, column G, line 65, you see that while the negative overall variance grows from year to date, it's also a smaller overall variance relative to net income. And that's really driven by strong blue sky bookings that the WC sales team has in place for third and fourth quarter. You see that despite the growing negative variance of line 4 food and beverage revenue, we are seeing all other event revenue categories coming in better than budget. Line 27, operating expenses, is expected to be about 2% over budget, driven by operating wages, line 15, and total event expense, line 20. That total event expense captures the amount of event revenue we share with our arena team tenants of food and beverage and merchandise sales. The line 34 tax revenues, keeping in the forecast, the year-to-date negative variance through the first 3 months, but are forecasting budget the rest of the year. And line 38 bucks district ticket surcharge down from budget, namely a result of their unfortunate early playoff exit before budgeting to have a deeper playoff run than what we saw. Again, the other notable big variance again is Milwaukee line 49. As mentioned on the prior page, this is a function of those fourth quarter tax revenues in 24 coming in better than expected. Overall, line 65 column G is showing that $1.5 million net income variance at $29 million of budget net income. Management isn't overly concerned at this time with this forecast for several reasons. Number one, I would say that some of our forecast projections are hedging on the conservative side with some uncertainty like the tariffs and the impact that's having on travel, as well as actions that reduce federal funding and grants to state national associations. We're taking a cautious approach to our forecasting for the remainder of the year, or until there appears to be more certainty associated with these larger macroeconomic issues. Number two, should this forecast come to pass, the district has sufficient operating reserves to manage through this without introducing material risk into the organization. And lastly, number three, there are some discretionary spending dials that management can turn if necessary that would limit cash outflows and still allow us to serve our customers, meet our contract obligations in 2025. The remainder of the calendar year is strong, some remaining opportunities for upside. So it is possible that come our next meeting in September, we close some or all of this budget gap. Any questions on the income statement?
Any questions online? Please, please note that Representative Haywood is joined as well. Galen, how are you?
Hey, I'm good. Good morning. I'm good. How are you?
Good.
Great breakfast,
What's
Kayla.
y'all's incoming breakfast? I know, but it's okay. Next week.
We're going to move on to pages 9 and 10. This is the district's annual capital budget forecast. On page 10, line 65, you see we're currently forecasting a budget number. One of the district's financial risk mitigation strategies is to hold most of our capital spend until the second half of the year. In the event we need to delay the implementation of any projects due to a challenging financial result from operations. For now, we are assuming all of our budget projects are executed, but again, it's a dial we can turn if necessary. Pages 11 and 12 represent cash flow projections for the remainder of the year. These really represent the district's checkbook balances. Page 11 is the unrestricted cash flow projection. These numbers are all derived from the projected year income statement viewed. You see in the bottom right-hand corner, we expect to have a year-end balance of $12.4 million, which is off from the budget number we established in October, but consistent with what we'd expect to see based on the forecast we're providing. Again, this balance is sufficient enough currently to fund any net negative cash flow from operations in 2025. And page 12 is that restricted projection, line 20. You can see we expect to grow the account by $5.9 million in 2025 and end the year with over $27 million in that fund, about $1 million more than what we had budgeted. With the balance getting to these levels, as I mentioned at the opening of this meeting, we will be investigating options to use a portion of these funds to defease some long-term debt. More to come on that matter as we move through summer. Certainly good news. Have options and flexibility with both of these fund balances. As I noted in January, these funds are a position of strength for the district. It allows us to manage through any net negative operating years we may incur and also create optionality for our debt management strategy. Mr. Chairman, that is my report. Happy to take questions.
Any questions for Steve? Great. Thank you. All done. Next, the CEO report. Murray.
Thank you, Mr. Chairman. Number of the items I'm going to go through, just bullet points of what I'll discuss next week. There are a few I want to go into detail with committee on this. Several months ago, we began a review of our different lobbyist team we had assembled, and felt that since we had gotten approval on the expansion, which this group was very helpful in allowing us to navigate both City of Milwaukee as well as Madison, we weren't seeing the traction that we had hoped in addressing other issues. So we brought in HB Strategies to join John Yingling, Gerald as our lobbyist effort. And the management side, it's Steve, Marsh, Sarah Mayo, and myself are involved in that organization. We're very excited what Blackwell Strategies brings to the organization, and I look forward to working with them as we plot the next chapter in the course of Wisconsin Center District.
And Marty, is Mora at Hush, or is that a collaboration between Hush and Mora?
There are three separate entities. You've got HB Strategy, which is, while they share the HB moniker, they are now separate entities and not the same organization. John Yingling and Moira. So John and Moira are two separate entities, and HB is the third, between Sarah, Steve, and myself.
Gotcha.
Good diversity in backgrounds and strengths of each.
So a team approach.
Correct. And we did look at one point of not having a team of third parties, but did it make sense to bring it inside? And based upon our needs and our economic model, it seemed to serve us better by having outside experts to be able to call upon. Something that I will get into in much more detail next week, but did want to give this committee a heads up, and that is that over the next 4 years, we have two major contracts that come up, two of our tenants. Based upon the terms of those agreements, I would really believe that we will come to the board and seek approval on contract terms. We have not begun those contract negotiations at all. They're very complicated. There are a lot of factors that will need to be looked at in determining what type of agreements we're looking to enter into from a financial standpoint as well as a length standpoint. I'll be coming back to share with you next week a little bit more information on that, but just wanted to give you a heads up. There are some business issues we're looking to get some more information on before we come to the board and see plan a year or so from now. So give you a heads up about that. The last thing that I really wanted to, this will be outside of the CEO report because I would hope to take a vote today with the governance committee, but then next week with the full board will require a vote if we get to that position. That's several weeks ago I issued to all a memo and then full length document or modified agreement with the city of Milwaukee. We have changed it where we referred to the document in the past as a pilot agreement. It's really not reflective of what it is because we are not subject to taxes and felt that moniker was problematic. So with the revised name is amended and restated services. In the city, as you may recall, in October of 23, realized for the first time that the agreement we had reached with them did not guarantee an annual payment. It identified a formula that our finances went through, and subject to the outcome of that calculation would either require us to or not to make a pilot. First 2 years of the agreement, it was a gradual increase in the amount. Year one, we were required to pay $250,000. Year two, $500,000. Year three would have been $750,000, taking us to year four and beyond of $1 million each year. We met the financial thresholds in years 1 and 2. In October of 23, as the city was doing its budget prep, we notified them that we did not anticipate making a payment for 3. Caught them by surprise. They believed incorrectly that the payment was guaranteed. That sparked I believe it was Finance Committee, city, to go to the Common Council and pass a resolution that directed city representatives to reach out to the district to commence discussions about modifying it. You're all aware of this. I'm just trying to set the table. It took a while for a meeting to get set up, but we did actively begin discussing with city representatives in October of 24. I met with them 6-7 times, very productive meetings, a lot of give and take, very collegial meetings with people coming and looking to do what's best for the city, from the city side, and us looking to do what's best for the district on our side. The end of the day is the document that we submitted to you for review and consideration has puts and takes for both sides. The city gets one of the probably the most important thing to them, and that's certainty in a payment. Past, well, they thought it was certain, it wasn't. 23 and 24 provided them with a hole. They were budgeting as if it was coming in conditionally. So that was a real problem. We understood that, respectful, and able to come to an agreement with that being $500,000 that we've committed to guarantee them from a certain standpoint. And our take back on that is that there's no calculation. We can't be accused of doing anything in how we're recording income or logging expenses. It's a straight, here's the fee, and we put it in your budget.
Is the money in the general fund, or can it be used for the good of the center?
It is a general fund. Initially, when we were in the initial discussions with them, we did not embrace the idea of having to pay a fee to the city, but we understood it was necessary to make sure that the relationship was positive. We had initially directed those funds be earmarked for public safety, police and fire budgets, and the city did not want to have any limitation on how those funds were used. So we did agree for it to be general fund to be used at their discretion. That's how we did not seek to have that change, nor did they offer that to change. One of the issues that we faced during the expansion was based upon the design of the expansion. There are a number of areas, 4 to be specific, that are designed in such a way that has us needing air rights. One of them is the back of house. You may not even know that it's there. It wasn't until the expansion, but connecting the south building to the north building across Wells, we built a back of house sky bridge that you can't see because it's darkened. They identified that as an air rights requirement. On the grand staircase on Bellar Phillips, we go out from the property line about 10-12 feet over Bellar Phillips sidewalk. That's required an air rights consideration. Replacing the Hyatt Sky Bridge that was an elevation not consistent with what we needed it to be for the design. We brought that down, and then we're told to get one of the permits we needed was to get the air rights to replace that sky bridge, which since 1995 we had not been paying any air rights for the same location, just different height. And then in order to get to 300,000 square feet for the exhibition hall, adding 112,000 square feet, we had to go over the Kilbourne sidewalk to get the exhibition hall to give us the requirement. Anyway, very lengthy, drawn out discussions going back to 2021 because we could not begin construction on those elements until we had air rights agreement. Our position back then was that based upon the pilot agreement that we had with the city, we were to be treated no differently than any city, state entity. And if they could demonstrate to us that other city, state, county agencies were paying an air rights fee, then we would pay the fee, but we were never given any proof.
They don't. I'm in that air rights. We're part of that. The Spring Hill Suites. We get a bill. There's no air rights bill. I wonder if you pay maintenance on the Bellar Phillips.
Hyatt,
The bridge. Do you share that with the Hyatt?
no, our portion of the Sky Bridge, we own and we're responsible. The point where it attaches to the garage, that's the Hyatt's responsibility.
Okay. So were we not paying any air rights fees at that, or were we?
Well,
Ever.
we had been paying air rights fees in order to get the permit to build those
Okay, so we've been
components.
paying.
We have been.
How much do we pay?
It's about $27,000,
In total? Okay.
which, if you take it over the course of 6 years, it's $1 million. And it's not even, I was very emotional.
Oh, you get that. Stop.
Because I felt that the agreement that we had in place exempted us from it. Or to make a point than to save $27,000 a year. That was one of the things I was thinking to get. So as part of the new agreement, they eliminated any requirements that make air rights payments for those 4 locations. As
So you're saying that institution of the air rights requirement coincided with the discovery that we didn't have a guaranteed payment to the city every year.
No,
Oh,
no, that unrelated.
Okay.
Unrelated, but
You just solved a bunch of problems.
yeah.
Personal.
But I think-
Everyone was annoyed.
The bigger point is I think it leads to, it's just set up for where we are now.
Yeah, it makes for a better deal that we have no requirement to pay air rights. We have the permit to have those structures in place where they are. But
And this was all Bob. Did anyone else come up with this idea?
as far as what going back to
With the whole thing, the whole mess.
was Bob involved? Yes. Was he alone? I don't recall.
I mean, I'd like to someday sit down with the mayor and say, next time you appoint someone, can you appoint someone who's friendly towards the center?
Bob's appointment is through the common council president. Change is beneficial to our organization. We get the other deal points that were beneficial to both sides have not changed. It's really the business points are we're going to get $500,000 a year, growing at 2.5% a year for the balance of the contract. The air rights fee gets eliminated,
And question, none of that is at risk. Is 500,000 guaranteed with the escalator at risk, or every year, everything?
every year it's a guaranteed payment,
Period.
regardless of
Nothing.
our. To their end, they can budget as revenue. On our side, we budget as expense,
Gotcha.
and we'll have to adjust. Oh, one of the components of the existing agreement had them to share if our net income achieved a certain level, it triggered another $1 million payment. So we have no other payments to them other than the 500,000 growing at 2.5% a year.
I think the big picture there is we've eliminated the air rights payment
As well.
Yeah, and then something that we had already been doing, but their negotiating team brought to the table, that we make the pledge that we would do everything we could within reason to work with the city to participate in their earn and learn program, apprentices programs, and look for ways to engage city residents and city businesses, minority businesses in our organization. We do that anyway. So the ask was, we memorialized it, but they weren't asking us to do something we already weren't doing. So all in all, it's very clean. They don't get into our books in regard to a pilot payment. Everybody can rely on what the expense and revenue is. And we do have another agreement in place that has us sharing our pilot payment expense with someone else. So it's really not, the full impact is not burdened solely by us. Nor was it in the prior, just as an aside. So I'm going to bring it to the full board next week for their approval, bringing this to the governance committee, asking that you consider endorsing the agreement for the full board. So, Mr. Chairman, if someone would be willing to make a motion to.
I have another question though, Marty.
Yeah, any questions?
Has he ever run at it?
Sorry. The last point you made. Does the city know or is aware that we are actually, sharing the payment to them with another?
No, sir.
They do not.
Yes.
That's subject to public information. What is that discoverable? Is it no?
That's that.
Yeah, it's discoverable. Yeah. If anyone's listening, they can see COVID records.
At this point, I guess,
Let's go.
And last question, have they totally, if this agreement is totally negotiated, they're good, everybody's good?
Thank you for that question. The process that we put in place with the city negotiating team, the city negotiating team was made up of Nick DeSanto, the mayor's chief of staff, Preston Cole, the head of administration for the city, Bill Christensen, who is the comptroller for the city, also on our board, and Jim Ball with the city. The city's representatives, invited President Perez as well as Bob Bauman to participate in all of the meetings. Neither of them did. The discussion that we made with the negotiating team was, let us present what we've agreed to at the table. It's always been understood. What we agreed to the table was what we agreed to take to our respective approving bodies, not the done deal. So what I sent to you last week, it was presented specifically in a format. The city representatives asked that they prepare the document because from a formatting standpoint, their people, the common council, are familiar with that document format, the resolution. We let them take the lead. Once we got it, we worked very closely with Hush Blackwell, and over the course of 2 weeks back and forth, got it to reflect what both parties have agreed to. So the process will be, this comes to our board next Friday. It will be the board will approve it. It then is already been, I believe, put on the calendar for the common council, and they would then take it to their vote either the end of May or early June, whatever the next common council meeting is. I'm not aware of any socialization that the negotiating team has done with common council members. What's been discussed is that both parties at the table believe this addresses each other's concerns. And we felt comfortable that if we were endorsing it, that our board would trust us in supporting it. I don't know how unified the common council will be on an issue like this. If they don't accept it, we're okay with the deal reverting back to the way it was. We were not the ones that initiated these discussions. We signed a deal in 20 that we're good for 40 years. We reacted to their desire to see it modified.
Under the current deal, have we hit financial triggers where we would be making a payment now?
No.
We still have not hit it.
No, and that was discussed briefly in the finance committee meeting. The payment in based upon the 24 financials, had we achieved the formula requirement, we would have owed the city $1 million. We are 7 figures away from below the threshold. So they don't know that yet because we haven't gotten the audited. It's contingent upon the audited financial statements, which we'll be voting on next week. But there would not be a payment made in 25 for 24 based upon our 24 final result. Whereas this payment, if we agree to this, the $500,000 payment would be first due May or April, March 31st of 26. So
So, go ahead. I'm sorry. No. As a follow up to that, Steve, according to 25 forecasts, we'd be making a payment in 26. No, we still
not under the current formula.
Do we have fixed charge coverage ratio? And does this apply to that now? Is there any difference in how it might apply now that it's a fixed payment? I don't know if we do or not. I don't know.
We don't have those types of ratios.
So it won't matter then. There are no covenant issues.
This was an emotional issue when it came up in 20 because we were surprised by it, and quite frankly, the stakes.
There are no covenant issues with in a bond.
It's not tied to anything.
I know going is, what if we have a problem? Can't pay him. Can't do that now.
Well, there are remedies for default. You couldn't be in default.
I just wondered if the change. I was more concerned if when it goes from a contingent payment to a fixed payment, does it change the character of our financial statement? Well, we have to present, but if we don't,
there's the practical should not be paid. Yes, that's a whole other issue. We're not there, right?
Materiality level too. I mean, this doesn't, how this is currently constructed doesn't even reach the level of materiality in terms of how Baker Tilly evaluates.
So if it's scheduled at Common Council in the next couple of weeks, who will be there representing the district?
At this point, and on attending, I'd be happy to.
We can send Moira to hang around.
Yeah, oh, yeah. We-
When you say, I'm thinking at the table to advocate that this was a good deal. It was a fully, vetted process. Each party had people at the table. And, right now we really think we're at the 11th hour. So to turn this thing upside on its head is not really the appropriate thing to do, Common Council.
I'd be willing to consider it. I would need
don't know.
to take the temperature of whether my presence would be beneficial or not.
Well, I think at the end of the day, we're in a good spot either way.
Yeah.
We have a deal that we on the
You don't
table
wanna do it,
that we
don't
like,
do it.
and if they don't want to do it, we already have a deal in place and we're fine with two.
That's true.
So I think we just play it down the middle and we've come to the table per our, for the recommendations and being good citizens, good players with the Common Council and the other folks. And we said we would bring proposal, we'd be willing to sit down. I think we've done that. And now the ball's kind of in Common Council's court. And if they vote against it, and we already have a deal.
That's a great point. Great point, Jim.
I guess I think it goes. I don't know first of all, I don't know the politics. So let's just start with the value of the information you're about to get. But maybe there is a PR opportunity. I think it's a question of a PR opportunity to get up in front of the audience, in front of the city, and say, "Hey, look, you know what? We realize that we are part of it's pretty much what you just said, that we're part of the community, and we want to help the city as best we can, and so we're flexible, and because we realize we're going to have this. It's not like this is an ongoing. We are married. It's an ongoing relationship, so we want to do our part. Now, do they not know if we have the votes? Is there reason to believe the Common Council?
Bill was here earlier. We didn't ask him to elaborate on anything. We didn't want him to jeopardize anything in his end. I don't know that. But I think, Sarah, to Greg's point, I think having some kind of release, if we want to consider that, saying here's how much the Senator is giving back to the city, the totality of it and what the amount is, because it will be a substantial amount. We've had those discussions in the background of how much it will be. And I think makes us look like greatest citizens and, shows that we're doing well and everything else. So again, good point for consideration for us to do.
Well, I guess part of that messaging will happen next week at the board meeting, which includes 3 members of the Common Council, which they will hear, and it's open. It's an open meeting that others can listen to.
And I hope I was fairly succinct in explaining the situation to you all. I'll be a little bit more scripted next week because there's a bigger audience that we're speaking to next week. We're speaking to the full board as well as potentially more media interest. So to be able to make the point of what we're doing will be important for next week. I don't know the dynamics of the Common Council in this one.
And maybe it's not even a release that we have to do. Maybe it's just part of your script.
Yeah.
How much it is. We tend to have media at these meetings, and they may report that. And I think it's a good news story.
But yeah, I don't recall if you were on the board at the time, but when this was presented to our board in 20, we did it in March or April 2nd, the day of the vote to move forward with the project. Simultaneously, we got approval on doing the pilot agreement, and must have been the meeting prior. No, it couldn't have been because
I think it was incorporated in the same discussion.
If there were elected officials on the state level who were appalled by the fact that the city was coming to us for any kind of payment. So if this, there's a lot of reasons to support this. It's a good deal for the city because it gives them the certainty that they've been lacking.
Yeah, no, great points all around. I think it's definitely something for your leadership team to consider all those pros and cons of statement, not a statement, how it's scripted in the meeting next week. Because, to Jim's point, we're kind of sitting in the catbird seat. Right now, we don't even foresee making a payment, and this agreement will at least, make some money move across the table in 26.
Short term, we're to the better financially, keeping the deal as it was.
Right.
It doesn't help to have a disgruntled part. And that's what we need to see, a part.
Yeah, and I guess I think too, not to do anything that would put them in a position to say, hey, the center district has stuff out there that makes us look crazy if we don't accept this deal, you know? So it's a delicate
Yeah.
dance.
If I were to be asked by the city's negotiating team to be part of the invitation to the board or common council, I don't know the format, whether there will be any discussion or if it's just an agenda item for that
I'd stay
day and
away.
it comes up.
I think you get in there, or anyone gets it. That kind of deal.
Oh, Representative Haywood.
Yeah, I was walking into the Capitol. I may have missed this. Who was on the city's negotiating team for this deal?
It was Nick Visetto, Mayor's Chief of Staff, Preston Cole, Head of Administration for the Mayor's Office, Jim Bowl, who works for, I think it's City Development. His title.
He's in innovation division of the
Yeah.
city.
Reports into the mayor, and then Bill Christensen.
Yeah. No, that was
Yeah, okay, so those are the four members of the city's negotiating team. Bill Christensen, by position, was named in the city resolution voted on in October 23. So the resolution stated representatives from the city and to include the comptroller. And from the district side was Steve Marsh and me.
Gotcha. And so the council is on board with this, which is for getting clarity. The council is on board, or we don't know where the council is.
We don't know if the council is on board with this. Our takeaway was that the district's responsibility was to socialize this with the board and get the WCD boards to approve the deal. And the city's team was responsible for securing the common council's approval.
Gotcha. Well, I'll just say this. I think that this deal was a deal that was definitely done in good faith, considering there was a previous deal already on the table that was agreed upon by the city and the district. So I do hope that the council and the members, especially the members on this board, will support this deal. And if they don't, then there's a deal on the table, but already on the table. But I would hope that the council would get behind this deal and support it. I think the city could use some certainty in their financial piece. So I hope that those members will get in line and support this deal.
I guess to all those points, is it clear that this is our final negotiated deal? We are not opening this up for additional renegotiation, correct? I don't know if that's correct or not.
I don't know that I would say this is our final and we're not doing it. This is, to get to a deal this frustrating, this negotiation. We spent 5 months getting to this point. This is a deal that Steve and I felt comfortable, made sense for the district, and one that we could recommend. I believe the same is true with the city's team.
Okay.
Our position in the beginning was, we already have a deal. We're happy to come talk to you. So,
Correct. Which we fulfilled that obligation that we promised.
negotiate in good faith.
Yep.
Last question, maybe this is more the legal question, but are there any inherent conflicts in the common council members who are part of this board voting on this, or even us as mayoral or governmental appointees? Is there a conflict?
But what we've been
yes, there's a huge
yes, but the current bylaw, which is another issue I think Jim would suggest. Third, it is calls for that if the individual feels there is a conflict, they need to self-identify. There is no mechanism that allows the chairman and any other members of the board to identify Mark for the conflict. So that's something we'd like to see addressed, but right now, unless it would be self-identified, because you could take the mayorals, could take the common council appointees.
Yeah. So all those, I guess, known conflicts, so to speak, fully on the table, and unless someone knows something kind of underneath that would create a bias in this vote, then they need to self-identify. Otherwise,
It is so. the broader picture there is we are going to, and this was a topic that we will discuss, we're going to work with Hush and maybe bring in another outside just expert on this stuff to work with Hush from representing the board style that, it's complicated because you dig into it and all of a sudden there's like a lot of wording in these bylaws that kind of trip over each other a little bit, quite honestly. So they need to be cleaned up. It's something that we're going to actively pursue cleaning up together. It is complex as heck, right? Because of who's on the board and how it's identified as who is on the board. And then all of a sudden you put the people on the board because of how the board is constructed, where you have to be in the hospitality industry, you have to be your mayoral appointee or county executive appointee at the end of the day, certain where you have to live and certain where you have to be a part of a hospitality industry. It creates conflicts, right? And then half the board is elected officials. So at the end of the day, we just need a little time to go through that. Your point is a good one on conflicts, and it's wrought with a lot of issues right now. I think everyone's acted in good faith. I don't think there's been anything that's done in a nefarious way at the end of the day with any of this stuff from elected officials or appointed folks. But I think we do need to clean that up a little bit, get more clarity around it. So that's one of the things that we're going to be working on over the next foreseeable future to get some more clarity to.
It would be appreciated if we could get a motion from the floor to accept the amended agreement as presented to the board, so that we go next week if it's paid with the governance committee.
We'll seek for a motion for approval of the modified agreement with what's it called?
It is called the
Amended Restated Services and Benefits Agreement.
Move it.
We have a second? All in favor, say aye. Aye. Any opposed?
Aye.
Great, thank you. Any opposed? I think that was an aye from Kayla.
Yes.
It was.
Yeah, it was I was on. Sorry, I said it like it was
I need approval. Yes. Gotcha. Okay, great. Thank you. And we will go to the broader board and have this discussion on Friday.
Thank you all.
Last few board meeting agenda, pretty similar to this. We're going to go through the audit report. We will go through this as well. Financials, a little more robust CEO report, as Marty stated. If there's anything that anyone needs, please contact us beforehand so we can get it on the agenda by like tomorrow, because we do need a week to publish the agenda prior to our meetings. With that, meeting date, our next meeting date is not then till September. Happy summer. And if there's anything else you want to discuss now, let us know. If not, take a motion to adjourn.
Move
Good second. All in favor, say aye.
Aye.
Aye. All right. Any opposed? Meeting is adjourned. Thank you very much.
Hey, what I'm going to have a big plate just for you. Thank you.
I'll come get it later, Marty. Thanks.
Not for you. Never mind.
I got you.